Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter at Great White FX, or call us at 234-803-930-61888.
Good evening, all. Good evening. You can hear me clearly and see my screen, please just type in yes into the chat box. If you can hear me clearly and see my screen, please type in yes into the chat box so that we can start. If you can hear me clearly and see my screen, please type yes into the chat box. Okay. Good evening. Welcome to Forex. Welcome to the weekly review for the 7th of September, for the 7th to 11th of September 2020. We Great White FX on the following pairs. And as you would like to know, I'd like to remind you again, trading foreign exchange on margin carries a high risk and may not be suitable for all investors. So before deciding to invest to trade foreign exchange, you should carefully consider your risk, appetite, objectives, level of experience, and investment objectives. The possibility exists that you can lose all or some of your investments. So you are advised to seek professional advice before investing. So that aside, let's get down to business. So as always, we're going to start with the dollar index. So looking at the dollar index, let me remove all my notations. So looking at the dollar index, we're going to look at it from the weekly point of view first. So if you look at the dollar index from the weekly point of view, you'll notice that the trend is still on the downside. But what it did is it spiked this low and closed back inside. And if you notice, the weekly close is what you would call a bullish piercing pattern. It's a bullish piercing pattern, just short of an engulfing formation on the weekly. So if you go down now to the daily, the trend is still to the downside, but we might see a little bit of correction to the upside. So looking at it, we can see wicks on the daily, which portends that there might be a little bit of correction to the downside before a move up to the upside. So how do you sort this? You go into your, that's where I will now put in my value. So looking at this, what's the game plan here? It's very simple. There is a possibility that price may rally. If it gets rejected from this previous week's high, then it may drop. So there is, looking at the setup, I'm of the opinion that the dollar index may still move to the upside. So you'll be watching the weekly 50, which comes in at 92.49, and this structure here, which comes in at 92.34. So if price dips down to any of this level and holds, then we might be looking at a further move to the upside. But still remember, the major bias on this pair is still slightly to the downside. Until dollar clears 93, let's say 94 area, then we might see that we now have a temporary low at 91.75. So that's it for the dollar index. The next pair we're going to be looking at is gold. So looking at gold, we can say that gold, the major trend is still bullish, but we are in a correction. The major trend is still to the upside, but we are in a correction for the time being, as you can see. So what does this entail? If you switch down now to your 4-hour time frame and put in the values, let me put in the values. This is what we're looking at. There's something I need to show here that will not be visible on the daily, on the 4-hour. If you notice, this is the all-time high at 1921.07. You see, when price closed below it here, since then it has not closed back below it. So whenever price gets to this level, there's always a bounce to the upside. So knowing that and going into the new week, you then know where you're most likely to have a better position buying gold, and where you have a better position taking a short position or exiting your long positions. So that's just what we have on gold. So I'm of the opinion that this 1921.07, you would always find buyers in there. So even if you take a short position, you should exit at this area. So as long as gold stays above 1916.69, which is last week's low, there is going to be a possibility that we would see a higher correction on gold into the weekly 50 by any of these levels here. So for gold, still major trend still bullish, but we are in a consolidation which might serve as a correction to the downside. So looking at the next one we're looking at is EURUSD. So looking at the EURUSD, this pair still has a bullish bias, although it has wicks to the upside, which shows reluctancy to move higher. So going down to the daily, we'll go down to the daily, back-to-back bearish engulfing patterns on the daily, which shows that this trend might be running out of steam. Although it's still bullish, but it shows that there is a little bit of reluctancy to move higher. So how are you going to trade this? It's very simple. Go down to the 4-hour time frame. If you look at the 4-hour time frame, the consolidation is becoming very clear. But if you notice, even though there's reluctancy to move lower, they are not making lower lows. The highs are always getting higher, which shows that they might still punch up. And if you look at this 4-hour formation here, if you switch to your line chart, it's taking a move that might portend a correction to the upside. So how do you treat this? Switch down to your moving your level. So as long as price stays above 1.1781, there is a tendency you might see any of these levels here. But I'm of the opinion that if you intend to short the EURUSD, the best place would be a retest of 1.1965. As you can see, there is structure there. If it gets rejected there, then it might move lower. But also bear in mind that there is a weekly low here, so there is a possibility that should price spike either of these lows and close back into it, then you might see it move to the high side. But for this pair, the major bias is still to the upside, but we are currently in a consolidation. So you'll be well advised on how to take your trade. So the next pair we're going to be looking at is the British Pound USD. So looking at the British Pound USD, let's look at it from the weekly perspective. Price, as you can see, the high for last week was 1.3482, and this high here comes in at 1.3550. I'm of the opinion for there to be a proper bearish bias on the Pound USD, they need to take out this high. Once that high is taken out, then you might see a proper bearish scenario on this pair. Because if you look at it, there is structure here, price dipped into it and bounced. So this pair is still bullish, but we are in a corrective phase. That's like a consolidation, as you can see. It's still making higher highs, and the lows are moving higher. So how do you trade this? Put in the values. As long as price is above the previous week's low, that's at 1.3176, there is a tendency that this pair might still push the upside. So if it gives you a bullish formation and you take a long position, these levels to the top side are possible exit areas, because I'm of the opinion that this pair still needs to go for this high. So that is it for the Pound USD. The next pair we're going to be looking at is Euro Pound. So looking at the Euro Pound, let's look at it from the weekly perspective. If you look at the Euro Pound from the weekly perspective, you can see that price just came few pips of this low and turned. If it had spiked this low and moved back up, that would be a very, very strong bullish confirmation. But even as it may be, we just need to trade with what we have around. So on the daily time frame, as you can see, we have an engulfing, a bullish engulfing on the daily time frame, and we have structure here. If you look to the left, there's also structure here. Let me put in the values. Put in the values. You see that there's this structure here, and that is probably where price is finding its support from. That's where price is probably finding its support from. So on this pair, I would advise you just look for bullish evidence to take to the long upside. As long as this week's low, that's at 0.8866 holds. As long as this week's low holds, that's the previous week's low, then there is a possibility this pair may still try to move to the upside. So that's just it on this pair. So let me look at it from the 4-hour time frame. So looking at it on the 4-hour time frame, you'll be looking to buy into dips as long as price stays above 88.66. So that's the scenario for the euro. And you must understand that the euro pound has a greater influence on most GBP pairs. So the next pair we're going to be looking at is the British pound Swiss franc. So looking at this pair, it came few pips to this weekly high here, few pips and pulled back. This pair, if you look at it from the weekly, you could say that it's in the down, the bias is to the downside, but this pair has the potential to still go for 1.2259. That's just my bias on this pair. It still has the potential to go for this high here. So once this high is taken out, then that will decide. And if you look to the left, there is structure. This high is nestled within this cell structure here. So on this pair, as long as price is above the weekly low, the previous week's low, this is the previous week's low. The previous week's low is coming at 1.22, and Friday's low. As long as price stays above these two levels, there is a tendency it might move higher. As you can already see, there is structure here on the 4-hour. So if price comes back into this level and holds, then you might see price move back up to the upside. A sell position on this pair, the best sign of a bearish reversal would be failure at 1.2259. So the next pair we're going to look at is Aussie dollar. So looking at the Aussie dollar, well, for this pair we can see there is a temporary top in place. If we look at this pair, let's look at it from the monthly view first. If we look at it from the monthly view, we can see that this high here, we can see that this high here has been taken out. You can see that this swing high here has been taken out, and if you look to the left, there is cell structure here. So drop down now to your lower time frame. So if we look at it on the 1-hour time, on the daily time frame, Friday's candle closed as a bullish formation. That's the test of this area here. So this pair, if you wish to short this pair, although the major trend is still to the upside, but if you wish to take a shot on this pair, let me put in the values. The best area will be around here. If you switch to your line chart, this was the last area before this opening. So if you intend to take a short position on this pair, the best location will be here. So your best location will be wait for a short position. So if this pair pulls back, as long as it stays above 0.7222, there is a tendency that this pair might rally up to here. As long as it stays above this previous week's low, there is a tendency it might rally up to the upside. So the next pair we're going to be looking at is the Euro Aussie dollar. So looking at this pair, if you look at it from the monthly view, it's still slightly to the downside, but it's in a consolidation. And if you look at the consolidation clearly, you will notice that this bearish candle is a range candle. As you can see, all price activity has been within this candle's body. So this gives you an idea of where you're most likely to be taking your short or long positions. So with that in mind, and as we look at the weekly close slightly bullish. So there is a possibility we might see a little bit of move to the upside. This pair is in a consolidation. So there is a tendency you might see further move to the upside. If we look at it from the daily, this pair from the daily, you can see there is kind of like a bullish formation here. You see these lows, then this bullish. So there might be a correction into the body of this candle before they move further to the upside. So how are you going to trade this pair? It's very simple. If you switch to your line chart, there's already a kind of formation here. There's a wide leg view formation here. And as you can see, price is testing this neckline here. So as long as price stays above here, there is a tendency we might see a reverse of structure here. So if you put in your values, price is sitting above the weekly 50. As long as we don't get the close back below this weekly 50, then there is a possibility price may challenge this previous week's high at 1.6327. So, but bear in mind, the primary trend on this pair is at the downside, but we are in a consolidation which might see price correct a little bit higher. That's for the intraday traders. So the next pair we're going to be looking at is the New Zealand US dollar. Looking at this pair, let me move out my values. Let's start from the monthly. If you look at this pair from the monthly, we could see that this high here has been taken out, and price came few pips to this high. The month of July 2019. That's the high here. The high there was at 67.90, and the high here, the high for last week was at 67.89. So you just see one pip short of that value. And then if you look at it on the weekly, we have this formation back into this high here, as you can see. So how are you going to trade this pair? It's very simple. If you look at this pair on the daily, you have structure here. So there is a possibility price may correct into this structure. So as long as price stays below 67.63, there is a tendency we might see it lower. So if you put that on the 4-hour time frame, filling the values, you just need to wait for price somewhere here. If price corrects up into this value and gets rejected, then you might see a move lower on price to test this area here. So that's it. This pair is still bullish, but it's in a correction. So you'll be looking to sell into rallies for the time being on this pair, as long as price is below 67.63. So the next pair we're going to be looking at is USDJPY. Looking at the USDJPY, I wouldn't say much. This pair is in a range. It's in a range. The range high comes in at 107.05, and the range low comes in at 105.10. So you just need to pick your levels within this and trade accordingly. We already have a structure here that price fell short of. So there is a possibility price may still test it higher, but if it gets rejected, then you'll be looking for this weekly 50 first, which comes in at 105.92 and the previous week's low. But for the USDJPY, it's in a range intraday. Next one we're going to be looking at is the Euro Yen. Looking at the Euro Yen, if you look at the Euro Yen from the monthly, weekly view, it has a long upper week. And if you look closely again, this appears to be a range candle, as you can see. Price spiked above it and dropped. So now this pair is still bullish, but it's in a consolidation. And when price is in a consolidation, you just need to know where your highs and lows are to trade accordingly. If you wish to take a short position, you need to be very cautious. The best bet is to look to buy dips as long as some levels hold. So what are those levels you'll be looking to hold on this pair? This is your first level of support. Last week's low, 125.22. Then your next level comes in at 124.34. So that's just basically it. So you'll be looking for, as you can see, wicks to the downside. Wicks to the downside point to the fact that there's reluctancy to move lower here. So there's a possibility this pair might try to move up. If you intend to short it, the best place is at this area here. Once price gets in here and gives you a bearish reversal pattern, then you can take a short position back towards the previous week. So the next one we're going to be looking at is the British Pound Yen. Looking at the British Pound Yen, if you look at this pair from the weekly, if you look to the left, you'll find out that this pair is in a sell structure area. It's still looking bullish, but where it is not a location where you want to take a long position. There is structure here at which you can look to take dips into as long as it holds. So how do you trade this? Go down to the 4-hour time frame. Go back our values. So there is a possibility this pair might rally to the upside. So on this pair, if you want to stay in line with the prevailing trend, you look to buy dips. As you can see, that's my bias. Price is in the sell zone, so you don't want to take a long position. You need to wait for price to come into a bullish structure. Then you take long positions. So the next pair we're going to be looking at is the USD card. Then we're looking at the USD card. I don't have markups on this pair for now. I was a little bit slow in getting to work on it. So if we look at this pair, we can see that there's structure here. Although price dipped into it, you can see that there's structure here. So just mark up structure. We have structure here. Then we have last week's low coming in here. And we have previous week's high coming in here. That's on the way. Then we drop down to our daily time frame. You can see that Thursday's candle closed bullish. And closing bullish, there is structure here. As you can see, there is structure here. And that is what this candle dipped into. And as you can look at the bottom, they are all closing equally. They are all making sure they are staying above 1.3047. As you can see. So this is not a pair I trade all the time. I barely trade this pair. So on this pair, where it is now, there is a possibility it might move to the upside. It just might move to the upside. So looking at this, so you just need to wait for bullish evidence here. As you can see, there is one here, there is here, and there's this area here. So as long as price is above 1.3036, there is a possibility this pair might move to the upside. But bear in mind, the bias is still bearish, but we are in a correction, in a consolidation. As you can see, price is making this low, a higher low. So if this low holds and price moves up, then you might see price target 1.3238. So the next pair and the final pair we're going to be looking at is the USDCHF. So looking at the USDCHF, well, let's look at it from the weekly. This pair is still to the downside. You see this major kind of like a range candle here on the monthly 1, 2, 3 before the break. So this might be a retest. You can see it's already forming what might look like a bullish pattern to retest this lows here, coming at 91.82. So that's not our major problem. We are mostly intraday traders. So if we look at this on the weekly, it's a bullish engulfing on the weekly. You can see price spiked this low and took out the range of this candle, this candle, this candle, and this very small one here. So it's a very, very strong engulfing candle. So if you look at it from the daily point of view, so let me mark up the levels on the weekly. It's a weekly high, previous week's high, and this is previous week's low. So that's sorted. You now drop down to the daily time. Drop down to your daily time frame. And you notice you have this loop here, and if you look at it, you have this structure here. This is a daily. So now the deal is, as long as price stays above 0.9090, there is a tendency you might see a move higher. As long as price stays above 0.9090, there is a tendency you might see a move higher on this thing. It's still bearish. That's what you have to bear at the back of your mind. It's still bearish, but it might give long opportunity. So that's what you'll be looking to take advantage of. So looking at it on the 4-hour, this is what you have. But should this level, you know, this is a daily level, this 0.9090 is a daily level. Should it give way, then your next level to take a long position comes again. That comes at 0.9039. So on this pair, you'll be looking to take long positions upon bullish evidence. Because as you can see on the weekly candle is the bullish engulfing. And if you look at it, if you look at chart, the price, this is the first time you're having this kind of engulfing candle. So that tells you that we might be looking at the short-term bottom at 0.8998, which is close to psychological level of 0.9000. So, do I have any questions? Anything anybody would want me to look at? These are my social media handles. My social media handle, in case you would wish to reach across to me. Registration is currently ongoing for the October 9-week masterclass. If your trading is not where it's supposed to be and you'd want to move it to the next level, I would advise you give our 9 weeks masterclass a test. It comes with a 4 weeks intensive mindset training, which, as you know, trading is 90% psychological and 10% technical. So that might also help you find out where you have your bad habits, habits that are militating against your trading, and help you work in harmony with them. Because change is difficult. If you try to change a bad habit instantly without understanding how to go about it, the habit is going to fight back, and you will end up being worse in a worse situation. So that's what the 4-week intensive mindset training does when you join the 9 weeks masterclass. So that said, do I have anybody who want me to look at that I didn't look at before we call it a night? The market starts in the next 1 hour, so I give you guys an opportunity to apply these levels to your chart. Anybody who want me to look at that I didn't touch? Okay, so you can type in your pair if you want. If you want any pair, just type it in. So
I came a bit late. I don't know if can. I don't know if the step goes. I don't know if you can. I said I came a bit late. I don't know if you.
you wait for the recording. You wait for the recording. The recording will be made available. You can watch it on YouTube. This is the YouTube channel. You just go to YouTube, type in "plan your trade your plan." I'll post the link. The links to the YouTube recording will be posted on the Facebook pages and my Twitter handle and the channels on Telegram. I have a free Telegram channel. You can access the Telegram channel from the Instagram handle. So you just go to Instagram, check the bio, and you'll be able to access the group. So I thank you all for taking your time to attend. I wish you all a beautiful night's sleep and a blessed and beautiful trading week ahead. Thank you all for coming.